When Bitcoin wins, fiat billionaires get flipped. And what that means is, several years ago at Coinbase, we calculated that somewhere between $100,000 and $1 million per Bitcoin, half the world's billionaires become crypto. And that means all fiat fortunes get diluted down because there's around 2,000 something billionaires, and around somewhere between 100,000 to $1 million per Bitcoin, you have 2,000 something new crypto billionaires. So all wealth becomes crypto, all property becomes cryptography, and that means global wealth becomes crypto. And so that's what we call the billionaire flippening.
Most Bitcoiners are in this for the long haul. They stack, they hodl, and they imagine a future where Bitcoin reshapes the world. But here's the thing. While we all know it's going to be massive, very few can fully picture just how big, how transformational, and how world-altering a Bitcoin future will actually be. That's where Balaji Srinivasan comes in. At Bitcoin Asia 2025, the former Coinbase CTO and angel investor delivered one of the most bullish, future-defining talks we've ever heard. His thesis? When Bitcoin wins. Not if, but when. And one of his most striking claims is what he calls the billionaire flipping. At somewhere between $100,000 and $1 million per Bitcoin, half the world's billionaires will be crypto billionaires. Fiat fortunes get diluted. Crypto becomes the base layer of global wealth. And suddenly, the richest people on the planet aren't the ones tied to governments and central banks. They're the ones tied to cryptography and code. Think about what that means. Wealth that used to be anchored in real estate, bonds, or legacy assets shifts into Bitcoin. Entire industries get repriced. Risk-tolerant, entrepreneurial capital starts dominating over stagnant, state-aligned fortunes. And Balaji argues this flipping isn't just a future scenario, it's already underway. That's how far Bitcoin has come in just 16 years. But billionaire flipping is just the start. Balaji lays out a series of domino effects, from the Federal Reserve losing control, to the end of unlimited money printing, to Bitcoin becoming what he calls the government of governments. And if that wasn't bullish enough, we'll also be tying this to Raul Pal's urgent new market update, a set of tweets that suggest we are about to witness one of the largest wealth transfers in human history. Stick around. Before we dive in, if you find this kind of future-focused Bitcoin content valuable, make sure to smash the like button, subscribe if you haven't already, and turn on notifications so you don't miss our next breakdown.
So when Bitcoin wins, it ends the Fed. And what does that mean? When Bitcoin wins, the Fed loses control. The Fed is actually not just the central bank of the United States, but it controls many other banks, central banks worldwide, from Japan to Canada to the UK. And that those then in turn control banking licenses, and they can freeze and seize funds, and of course they can print money. And Bitcoin exists outside the Fed's video game. Okay, so the Fed can freeze and seize everything within this network of banks, but it can't freeze and seize Bitcoin. It can't introduce 21 million plus more than the 21 million Bitcoin. So when Bitcoin wins, the Fed loses root control. Okay? Number two, when Bitcoin wins, gyrating rates get replaced with predictable policy. In the top right there is Fed interest rates, and they go like this, and that's just a function of feels. There's actually a Wall Street Journal article, for example, that actually there's a Fed governor who admits that what he felt like in the morning, he decided, okay, we're going to raise rates like half a point, and it's literally just feels. They scroll the feed and they put in, the interest rates and stuff. So gyrating rates get replaced with predictable policy. What happens is you go from the interest rates going up and down and the Fed just monkeying with everything to something which is algorithmic and predictable monetary policy, which is Bitcoin. And that's just this enormous leap forward in terms of the ability to plan for the future and not buy something and have rates hike to the moon or crash to the ground. You don't have the entire world thinking about what the Fed is going to do and the entire financial system architected on reading the tea leaves. Instead, it's very clear what the issuance rate is going to be, and so you've got algorithmic monetary policy. Then when Bitcoin wins, payments become packets. Okay, so this is Wireshark showing the Bitcoin protocol, and you can see that essentially there's no reference to a bank, there's no reference to a state. This is purely the network. Payments have become packets. And this is essentially this international network as opposed to an individual states network. When you actually get under the hood and realize what's happening here, it's actually really amazing. When Bitcoin wins, by the way, it wins around the world. It doesn't just win in any country. This is a map from 2024. You can argue maybe the percentages in this country or that country, but you can't argue with the fact that Bitcoin is a global phenomenon. It's not the state, it's a network. And when Bitcoin wins, it can win very fast. So when the faith in currency in Lebanon went to zero, when the full faith in credit in the Lebanese pound went to zero, Bitcoin was there, and it just went vertical like this, okay? So, hodl. When Bitcoin wins, it can win very fast. So next, when Bitcoin wins, Keynesianism falls like communism. And so basically when Bitcoin wins, treasuries will fade. People talk about US treasuries and more generally Western bonds as the risk-free rate of return, but really they're kind of the return-free risk. And if you've looked at the last 5 years, it's been the worst bond market ever with yield spiking. And if you don't know what this is, just look it up if you want. But essentially, this is something where people just they need to have a very high rate in order to hold on to US and Western government debt. And this is only going to get worse as inflation picks up. So you stop saving in US government bonds and you start saving in the hardest money around, which is Bitcoin. When Bitcoin wins, also real estate falls in real terms. So in the West, since the 2008 financial crisis, the Fed has been printing money to buy mortgage-backed securities, thereby taxing the population in multiple ways, first diluting them down to the printing and then bidding against them in the market, which is why it's so absolutely crazy in terms of where the housing prices, rental prices are in the West. This is something which is a upward redistribution of wealth to asset owners and especially real estate owners and property owners at the expense of renters and those coming up in their career. And the counterattack on this is when Bitcoin wins, real estate falls in real terms. And people stop actually, using houses as an investment and they invest in Bitcoin. They hold Bitcoin, really they store value in Bitcoin. In houses, apartments, that's for utility. So when Bitcoin wins, fiat also faces global competition. If you know what happened with local news, when all the local newspapers got online, suddenly their local geographical monopolies of paper newspapers didn't matter anymore. They all had to compete with each other, and most of them failed. And only the global papers, the Wall Street Journals and Financial Timeses and so on, survived. And then they too essentially collapsed against social media and a truly internet-first media. And the same thing is about to happen with the introduction of all these stable coins around the world. As all these coins go on chain, and they have to, all these local currencies go on chain, they're going to have to, then they're all going to be in competition with each other. And the ones with bad monetary policies, anybody in their country, they have no geographical monopoly of cash anymore, just like the newspapers lost their geographical monopoly of paper. The distribution, the trucks, that didn't matter anymore, just like the distribution of the paper notes doesn't matter. So every currency, every national currency is in competition with every other national currency, and most of them won't survive, only the very best ones will. And so that means cryptocurrency will take over, because eventually, just like Twitter and social media beat NYT and Wall Street Journal, and those in turn beat local media, so too Bitcoin beats stable coins, the best stable coins, which beat the bad currencies. So fiat faces global competition, and that means states face accountability in a way they never had before. There's actually now a check on what they can do.
Balaji's first big point is simple but groundbreaking. When Bitcoin wins, the Fed loses. The US central bank, along with its global network of partner banks, can print, freeze, and seize fiat at will. But Bitcoin operates outside their control. With its fixed supply and algorithmic monetary policy, Bitcoin strips away the Fed's ability to manipulate interest rates on feels and forces the world into predictable, transparent monetary planning. Payments become packets on a borderless network. Keynesianism falls like communism. Bonds and real estate lose their privileged status as stores of value. And fiat currencies, once protected by geography, suddenly face global competition as stablecoins and Bitcoin go head-to-head on an open playing field. And then he sharpens his focus on the billionaire flipping. As Bitcoin rises, fiat wealth gets diluted, and crypto wealth explodes. That transition produces capital that is contrarian, risk-tolerant, and independent of Western institutions. And beyond that, the end of unlimited money printing forces governments to finally live within their means. Bitcoin becomes the government of governments, a kind of hard-coded maximum tax that no state can overrun. But Balaji also warns, once Bitcoin wins, the attacks begin. Coders, networks, software, and even communities will be targeted by desperate governments. And that's why, he stresses, your physical location, a jurisdiction that respects property rights, is even more important than your portfolio allocation.
When Bitcoin wins, fiat billionaires get flipped. And what that means is, several years ago at Coinbase, we calculated that somewhere between $100,000 and $1 million per Bitcoin, half the world's billionaires become crypto. And that means all fiat fortunes get diluted down because there's around 2,000 something billionaires, and around somewhere between $100,000 to $1 million per Bitcoin, you have 2,000 something new crypto billionaires. So all wealth becomes crypto, all property becomes cryptography, and that means global wealth becomes crypto. And so that's what we call the billionaire flippening, and that's kind of already underway, and you're going to see that in the next few years. And that means genuinely risk-tolerant capital, because that is capital that accrues to individuals as opposed to things that are attached to the Western state or accumulated in nonprofits. It's really for those who are contrarian but right and bucking the system, as opposed to those who are conforming to the system. B-U-C-K-I-N-G. Okay. Next, when Bitcoin wins, the printer runs out of toner. Okay. In 2010, there's this really unusually honest article called "How to Spend 1.25 Trillion," and NPR unusually, uncommonly at the time, admitted that the Fed had a unique power. It could just print $1 trillion out of thin air. Now, if you think about what it takes to make $1 trillion, that's like selling a $1,000 iPhone to 1 billion people. That's $1 trillion in revenue. To make $1 trillion in profit is another thing entirely, because your $1,000 phone will have, I don't know, whatever $100 cost, right? You'll have to discount it by the time you get to user 300 million, let alone 1 billion. So to just print $1 trillion out of nowhere is just this absolutely gigantic seizure of wealth that's distributed across billions of people worldwide, not just 300 million Americans. So the entire money printer go burr era just goes away completely, and the printer runs out of toner, and these governments actually need to work for a living. It's just a completely different world. And when Bitcoin wins, it becomes the government of governments. So in the 20th century, there's this book, there's another book called, I think something like Gold, Blood, and Treasure by the Army War College. And essentially the point is that only in the 20th century did you actually have total war, because governments had no constraint on their spending. So they just threw more men, more guns, and so on. That's why the world wars were so damaging. Before then, governments were actually constrained by gold, which they couldn't print. And so when Bitcoin wins, it actually becomes a government of governments. It's like a fusion of the progressive idea of the world government and the libertarian idea of limited government. It's the government of governments that ensures the governments are limited because they just can't spend that much, right? There's limits on how much they can seize. It's like a minimum wage, except it's a maximum tax. So the max tax, not just a minimum wage. It's a government of governments. And so when Bitcoin wins, though, the battle begins. And the thing is that nothing just rises to infinity. It's never a totally clean exponential. As you hit a new level, there's pushback, and then it goes down and it goes back up. So there's going to be many kinds of attacks. For example, there will be attacks on coders. The Roman Storm trial, Free Roman Storm, is just the beginning of this. I think that in general, if you are a programmer, you should be in a jurisdiction that you think is going to respect your safety. El Salvador could be that for many Bitcoin developers, potentially the UAE. When Bitcoin wins, the cryptography will be attacked. So quantum cryptography is not a theoretical thing. It is something that poses at least some danger to ECDSA. And there's a migration strategy now, but that migration strategy would mean everybody has to send from their address to a new quantum proof address. And that might take a very long time. And so we need to actually think about this, put research into this, potentially figure out a better mechanism here. So assume the cryptography will be attacked, because it'll just become a life or death scenario for many of these states. When Bitcoin wins, the network will also be attacked. Right now, just recently, the Bitcoin network passed 1 zeta hash per second, which is a crazy amount of hash power. But if you calculate it out, that's somewhere between $10 to $100 billion in hash power if you're just going to buy that from scratch and rack and stack it. That's actually on par with some of the AI data center spends. So I'm not saying there's a large number of actors worldwide who can do this, but there are some. And we're going to have a hash rate race at some point, and that's going to be a fairly big deal. So the network will be attacked, and we're going to have to see whether a coalition of different states and companies can rack and stack enough hash rate in order to keep the sort of balance of hash and prevent one entity from getting 51%. When Bitcoin wins, software will also be attacked. The biggest vulnerability to Bitcoin, arguably today, is Apple, Google, and Microsoft, because between them, they have trusted access to effectively push a backdoor to any computer with Windows Update, with software update, with updating Android phones and Apple phones. This is something which I think is under-theorized as a practical attack vector. And so you can use Linux devices. That's a possibility. You can, in theory, scale some new operating system to 1 billion users. But in practice, the defense here may just, as a Bitcoiner, be joining these big tech companies. Tim Cook actually has said publicly he holds some Bitcoin. And so it may just be something where you join the big tech company and you just make sure that they're not doing this. Look out for basically the civil rights and property rights of all of the Bitcoin holders worldwide. When Bitcoin wins, the community will be attacked. FDR's 1933 gold seizure is a prototype for the kind of thing that will happen. States that are actually running out of money will get very desperate and very, very, very crazy. And so all kinds of crazy things are going to happen. So the next 10 years are going to be wild. And so what I suggest is to pick your location. Your physical location is much more important than your portfolio allocation over the next 10 years.
Balaji wraps his talk by reminding us that a Bitcoin win doesn't mean utopia, but it does mean a new foundation. He predicts a move away from one-party or two-party political systems toward what he calls the thousand-city system, where people choose their jurisdictions the way students choose their colleges. Freedom of choice becomes real. And with conferences, schools, and startup societies already forming, the time to build is now. But let's shift gears and bring in Raul Pal, who just delivered one of his most urgent market updates yet. Here's what he said. Crypto is still being adopted at twice the speed of the internet from 5 million IP addresses versus 5 million wallets, very like for like. And it's on its way to 4 billion by 2030. And that will take it from $4 trillion in market cap today to $100 trillion by 2030/2034. And that is driven by the two secular trends, adoption and debasement. Debasement explains 90% of price action. Adoption explains 100% of outperformance versus debasement. Yes, that is an R-squared of 90%. Think about that. 4 billion users, a $100 trillion asset class, in under a decade. And he points out why. Two unstoppable secular trends, adoption and debasement. Adoption explains outperformance. Debasement explains 90% of price action. That's an R-squared of 90%. In other words, Bitcoin's rise isn't random. It's mathematical. It's inevitable. And then Raoul turns to the traders who worry about September corrections or weekly charts. He says, and all you care about is if September is going to be weak. You can't be saved from yourself if that is your mindset. This is the comp versus 2017. Just sit in the waiting room, huddle, and touch grass. It will all play out with or without your endless fretting. This is classic Raoul. Zoom out, see the curve, understand the adoption cycle. Traders stress over noise, but the real opportunity lies in the macro trend. We're not talking about a trillion here or a trillion there. We're talking about a 25 times growth from today's $4 trillion market cap to $100 trillion by the early 2030s. That's not just bigger than gold. That's bigger than global real estate, bigger than equities. It's the total reordering of global wealth that Balaji has been describing. Billionaire flipping on a scale the world has never seen. And this is why these two visions, Balaji's blueprint and Raoul's forecast, fit together so perfectly. Bitcoin doesn't just replace fiat. It rewires power. It reallocates capital. And it builds new communities, new cities, and new nations for the Bitcoin era. So don't get distracted by the short-term noise. Think big. Think long-term. Think when Bitcoin wins. Because it's already happening. If you're as bullish as we are after hearing this, make sure you're subscribed. Hit the like button so more people can see this, and share this video with someone who still doesn't grasp just how big this is going to get. Thanks for watching, and we'll see you in the next one.